This is crypto!
What up, Crypto Warriors? It's Sergeant Crypto back at it again. Today is Tuesday, the 18th of May, 2021. It is 1:30 in the AM as of this recording right now. We are in the green over the past 24 hours. Slight recovery, so to speak. And where will we go? I have no idea. But just like the thumbnail states, don't believe the hype. It wasn't just all Elon Musk and everything just resting on one man's shoulder and him manipulating the market. There is some of that, and there are all the other things to take into consideration as well. Before we get into that, remember to smash that like, hit that subscribe button. If you're new around here, smash that subscribe button and hit that notification bell to get notified when I upload new videos. Let's get into it. So as you can see, everything is in the green. Green. Let's see if we see any red in the top 25 or so. No. Let's see where we can find the first red coin in the top. Nothing. Let's see. Nope, that's DAI. USDC doesn't count. Oh, here we go. Leo coin. First red coin, and that's number 55. Let's scroll down some more. Anything else in the top 100? Paxos trading sideways. Oh, that's the standards. So this is a stable coin if I'm not mistaken. So that doesn't count. So one coin in the top 100 trading red over the past 24 hours. Congratulations to everyone that did not panic and bought the dip. BTFD, people. BTFD, not financial advice. I definitely got some Bitcoin at 45K and at 42K. Not mad about that. So I'm already in profits. All right. So yes, there you have it. Let's get into it. See, where's Cardano? Yeah, trading sideways. Let's get into it. So here it is. This is coming from my Twitter account. Give me a follow at Sergeant Crypto 99, and I retweeted this from Caitlin Long. If you have no idea who Caitlin Long is, ex-Wall Street banker, became basically a Bitcoin advocate and lawmaker in Wyoming to protect people from institutions and the government taking and trying to confiscate their property, which is Bitcoin. Bitcoin being the best property in the known universe right now. In Wyoming, they protect you and protect your Bitcoin from the likes of the government and institutions like banks and things of that nature. Okay, so she let this tweet out. It says, some thoughts on stablecoins and the crypto sell-off, which are probably connected. Huge news last week, and it matters far more than Elon Musk or Binance news. Remember, not only the fact that it was Elon Musk tweeting out about Bitcoin and the so-called energy conspiracy, but we also had the Binance FUD coming out that the U.S. government is trying to track tax evaders from that used, I should say, Binance, and it made it seem like they were going to probe Binance to get the bad guys, and it wasn't really anything like that. It was just, an article, or just like a clickbait, so to speak. All right, but she wrote this long thread with over 30 something like tweets. This is number 4 right here, and it was a long ass thread. But basically, Tether came out and stated that they are not 100% backed by one-to-one to US dollars. It's something like 60% or something to that effect, and the rest of it is securities and some other assets. Basically, what I spoke about last week or a couple of weeks ago about crypto being the fact that they're trying to make cryptocurrency into the old world and the old way of doing things. And I'll show you what I'm talking. And here it is. All the world's monies, right? All of the world's money and markets in one visualization. I love showing this. This way you can get an idea of what I'm talking about. So what I'm talking about here is the derivatives market, and the way how there are paper claims on assets multiple times on one asset. So if you're trading ETFs for gold, for instance, there may be 5 to 10 paper claims to that 1 ounce of gold. And that's what basically brought us the crash in 2008. All right, because they were trading back and forth all these paper assets without the backing of real assets. They were just trading a lie. Now, with Tether, the fact that they aren't fully backed, it may lead to some assets, or lead to hedge funds having to get out of Tether, because now Tether has come out and fully disclosed that, hey, we are not one-to-one backed by US dollars. And this is not new news. This turned out to be something that has been known back since like early 2018, late 2017, early 2018. This was Tether FUD for a long time. But they came out and they said it. Basically, what it's coming down to is Tether, if they're not 100% backed, then they are acting like the Federal Reserve. They could mint Tether as they please, which means that leaves a lot of hedge funds exposed to a derivatives or a paper claim to something that does not exist. And that may have been the catalyst to lead them to have a big sell-off. Now, this was my question to her was, why, when she speaks of risk an example, she gave an example here. Example: if risk managers now apply a 5 to 10% haircut for Tether, and Tether is in a trader's portfolio, the trader must bring down total exposure by selling off non-Tether crypto. My question was, why? Would they just use Tether and buy cryptos for less exposure to Tether? Meaning, why wouldn't they, I should have stated that better, like, why wouldn't they just use that Tether to escape from Tether? Why would they sell cryptos to escape from Tether? Like it wasn't making any sense to me. But she got down deep, and it's some high level shit here, way over my pay grade. Have to read it, once or twice, and to really try to grasp what's happening here. But basically, it's having exposure to paper claims to something that does not exist, right? And technically, the U.S. government, or not the U.S. government, I take that back. Let me backpedal. The Federal Reserve, right, a private bank, they're the only ones that can print U.S. dollars at will. Okay, they're the only ones that are supposed to be able to do that, and Tether is technically doing that, right? And that's leaving a lot of people exposed to, again, those quote unquote paper claims to something that's not backing it one-to-one. Because if they're claiming that they're having other assets, they may have risky assets. Now, if those assets fall in price, right? If some crash happens or whatever, those assets fall in price, then that should technically bring down the amount of tethers that's out there. But we know that they may mint more on top of it. Okay. So, like I said, please come over here on Twitter, get down deep into the woods with this. This one goes far, and this really explains why, one of the reasons why, what's happening right now in the market, or what had happened in the market over the weekend, had nothing to do. Yes, I definitely think Elon Musk has something to do with it, but it's like one of the layers of many layered freaking onion. Okay, it's like just one of the layers peeling back. All right, he was just one layer, but then we had this Tether thing that happened last week. And also, let's not forget that today or yesterday, because today's the 18th, yesterday was the last day to file taxes. People were basically waiting till the last minute to file taxes. So they were either tax harvesting or just selling off their assets. This way they could pay their taxes for 2020. And here you have it. All right. Oh, well, this is about the Tether thing again. This is coming from Decrypt. Tether reveals reserves breakdown for the first time since 2014. All right. Stablecoin issuer has revealed that nearly 76% of his reserves were held in cash and cash equivalents as of March 2021. That is scary. As of March 2021, and this came out May 13th. Like I said, this was you got to come over here. As always, everything will be linked in the description below. But yes, May 17th, tax deadline. IRS extends tax deadline to May 17th, 2021. And people wait till the last minute. People that have to pay taxes, wait till the last minute to pay their taxes. And what is liquid 24/7? What is the most liquid market 24/7? Cryptos. Crypto is the most liquid market 24/7, and people were selling off over the weekend to probably file their taxes or to pay their taxes. All right. Next, IRS, speaking about taxes, this is coming from Cointelegraph. IRS will seize your crypto if you can't pay back taxes. And again, this goes back to what we were saying about the whole tax situation. The fact that, people that owe taxes, they will wait till the last minute to pay their taxes. And it just goes into talking about them, the way how they treat cryptos is they treat it as property. They treat it as property, and they will seize it as property if you did not or do not pay your taxes. All right, and crypto investors have been able to skirt taxes legally by borrowing against their holdings, something that MicroStrategy Michael Saylor strongly advises. All right, platforms like BlockFi, Celsius, which I use personally. All right, this was how I was able to get some of the dip, because I borrowed against my crypto. All right, I borrowed against some Bitcoin at 1%, which is nothing. At 1% for a year. I borrowed against my crypto at 1% for a year, and just use that to buy more cryptos on these big red days. Well, not today, but the past couple of days. All right, and others allow users to obtain collateralized loans on their digital asset holdings. All right, so that's one of the reasons, the whole tax situation. I know this is definitely one of my quote unquote more boring videos, and because it goes into a lot of financials and goes into depth, and I'm just barely scraping the surface here. I'm not really digging deep into the woods, because like I said, that friggin' tweet storm that Caitlin Long released, man, it really breaks it down and get really into the weeds about this whole situation. All right, and last but not least, coming from Cointelegraph again, New York Department of Finance, the NYDFS, taps former DOJ attorney as deputy virtual currency chief. So now we have a virtual currency chief here in New York State. All right, Deborah Brooks' new role with the NYDFS, New York Department of Finance, or Financial Services, I should say, I'm sorry, may suggest more of a focus on regulation through enforcement. So to all my New Yorkers, including myself, we got to watch this one very closely to see how it turns out. But yeah, she's a former DOJ attorney, and we know that they don't like cryptocurrency, especially with that whole BitLicense garbage that they have. All right, so this is something I'm definitely keeping my radar and see how it unfolds. But let me know what you guys think. Smash a like, hit that subscribe button and notification bell. And remember, do not put your heroes up on a pedestal, i.e. like Elon Musk and things of that nature. He is playing 4D chess, people. He's a billionaire. All right, trades between the number one and number two wealthiest person in the world, and he is definitely playing a different type of game when it comes to the way how he tweets and the way how he manipulates markets. And we know that he doesn't like the SEC. So who knows how he's trying to play it here, as far as if they come after him, right? If they try to come after him and say, hey, you're manipulating the markets, and he's like, well, hey, this doesn't fall under your jurisdiction, so you can't tell me what to do, all right? And then there's a 1 in 100 million chance that he may actually be Satoshi. Please remember, people, that he made PayPal, all right? He understands the way how banking systems work. So for all we know, he really could be Satoshi. All right. So, and he's just, again, playing 4D chess. Who knows, right? Let's discuss it in the comment section below. Smash that like, hit that subscribe button, and notification bell. It's Sergeant Crypto and about. Peace.